Good morning, investors. You are now on KleverStock with me, Ainunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The IPM KLCI edged higher as investors weigh expectations that foreign funds could take profit from equities ahead of the implementation of the new U.S. tariffs later this month. TA Securities said the stocks are likely to undergo a profit-taking pullback as investors move to secure gains before U.S. President Donald Trump's latest round of sectoral tariffs comes into effect. The research house highlighted immediate support at the 61.80% Fibonacci retracement FR level of 1,564, with stronger support levels at the 50% FR of 1,527 and the 38.2% FR of 1,490. On the upside, immediate resistance remains at the December 2024 high of 1,644, followed by further hurdles at 1,684 and 1,695. Meanwhile, markets were also closely monitoring the potential shutdown of the U.S. government at noon Malaysian time after Congress failed to agree on a federal spending bill. Despite this, Wall Street showed resilience overnight, with investors maintaining bullish sentiment on the back of interest rate cut expectations and optimism surrounding AI-driven earnings. The upbeat tone from the U.S. carried into Malaysian equities, pushing the IPM KLCI into the 3-day winning streak, though gains were tempered by caution over trade developments. At 9 a.m., the IPM KLCI opened 0.74 points higher at 1,612.62, riding on the bullish momentum seen in recent sessions. Among blue chips, Petronas Gas rose 12 cents to 18 ringgit and 62 cents, Hong Leong Bank advanced to 10 cents to 20 ringgit and 62 cents, and PBB added 10 cents to 10 ringgit and 20 cents. In the active list, Next GBNA was unchanged at 9.5 cents. Key ASIC was flat at 4 cents, while VS Industry inched up half a cent to 59.5 cents. Moving on to local currency updates. The ringgit extended its gains against US dollar on Wednesday, opening stronger at 4.1980 or 4.2190 at 8:02 a.m. compared with Tuesday's close of 4.2050 or 4.2090. Moving on to local currency updates, the ringgit extended its gains against US dollar on Wednesday, opening stronger at 4.1980 or 4.2190 at 8:02 a.m. compared with Tuesday's close of 4.2050 or 4.2090. Bank Muhammad Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nisam Abdul Rashid noted that persistent worries over a potential United States government shutdown are likely to support the ringgit, while expectations of lower U.S. interest rates could further weaken the dollar. He added that the local note may attempt to break the psychological level of 4.20 after closing 0.25% higher yesterday. The ringgit also strengthened against a basket of major and regional currencies against the Japanese yen. Against Japanese yen, it affirmed to 2.8348 or 2.8491, while against the British pound, it rose to 5.6417 or 5.6699. It improved to 4.9251 or 4.9497 against the euro. Regionally, the ringgit advanced to 3.2530 or 3.292695 against the Singapore dollar. It edged up against Indonesia rupiah at 251.9 or 253.2, appreciated versus the Philippine peso at 7.21 or 7.25, and improved to 12.9265 or 12.9963 against the Thai baht. Continuing with some local economic updates. Malaysia's average monthly household income in 2024 is projected to range between 9,200 ringgit and 9,800 ringgit, with official data expected before the end of October. Finance Minister Second, Dato Sri Amir Hamzah Azizan, said the figures on household income and poverty reduction will first be presented to the Cabinet before being released publicly. The Department of Statistics de Malaysia, DOSM, conducts the household income and expenditure survey twice every 5 years, with the most recent survey held in 2022. Preliminary findings under the 13th Malaysia Plan show that the average monthly household income rising to 9,155 in ringgit in 2024, compared with 7,901 ringgit in 2019. The incidence of absolute poverty improved to 5.8%, down from 8.4% in 2020 during the COVID-19 pandemic. DOSM data also showed that the mean monthly household income at 8,479 ringgit in 2022, while the median stood at 6,338 ringgit. Income growth that year was more moderate compared to pre-pandemic years. In urban areas, median household income rose from 6,561 ringgit in 2019 to 7,243 ringgit in 2022, while rural median income increased from 3,828 ringgit to 4,094 ringgit. Mean household income in urban areas grew from 8,635 ringgit to 9,428 ringgit, and in rural areas from 5,004 ringgit to 5,147 ringgit. Dr. Muhammad Idham Muhammad Raza of University Technology Mara projected household income for 2024 to range between 9,200 ringgit and 9,800 ringgit, supported by the steady GDP growth of 4.5 to 5.0% since 2022, unemployment below 3.5%, and strong wage gains in both formal and digital sectors. He added that if the finance minister's encouraging figures are accurate, income levels could hit the higher end of the range, marking stronger purchasing power and improved living standards across both urban and rural households. Looking ahead, Dr. Idham suggested a realistic projection of 15 to 20% real increase in average household income for 2024 to 2025, compared to the pre-pandemic baseline of 7,901 ringgit. He said this implies that household spending capacity is not only recovering but shifting from essentials toward discretionary items, education, digital services, and modest asset accumulation. If these income gains are broadly shared among the B40 and M40 groups, domestic demand will strengthen, supporting small and medium enterprises and creating a virtuous cycle of inclusive growth, positioning Malaysia closer to its high-income nation goals. And now moving on to corporate news update. Global air cargo demand, measured in cargo ton kilometers of CTK, rose 4.1% year-on-year in August 2025 compared with August 2024 levels, with international operations posting a stronger increase of 5.1%. Capacity measured in available cargo ton kilometers or ACTK expanded 3.7% compared with August last year, and international operations registered a growth of 5.5%. According to the International Air Transport Association, ITA, this performance marked the sixth consecutive month of year-on-year growth, underscoring the resilience of the air cargo sector amid shifting global trade patterns. IATA Director General Willie Walsh said volumes have continued to expand as shippers increasingly redirect certain high-value goods from sea to air to mitigate the risk of tariff changes. He noted that growth is being diverted away from North America and following more strongly through the Europe, Asia, within Asia, Africa, Asia, and Middle East Asia trade lanes, highlighting the adaptability of the sector as shippers navigate the evolving United States tariff policy landscape. Now, regionally, Asia Pacific Airlines recorded a 9.8% year-on-year growth in demand in August 2025, with capacity up by 6.9%. In contrast, North American carriers registered a 2.1% decline in demand, the weakest performance among all regions, alongside a 1% contraction in capacity. European carriers, meanwhile, posted a 3.2% increase in demand, with capacity climbing 4.2%. On major trade lanes, Europe, Asia, and within Asia recorded robust double-digit growth, while Middle East Asia, North America, Europe, and Africa Asia also saw notable increases. In contrast, Asia, North America, Middle East, Europe, and within Europe trade flows registered declines, reflecting the uneven distribution of cargo growth across different regions. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Sunway has completed its maiden issuance of 230 million ringgit sustainability medium-term notes under its MTN program, and the proceeds will be used to part finance or reimburse land and earthwork cost for the Pandas land development. Mitra Jaya Holdings said the contract value for its Kuala Lumpur data center project awarded by Next TDC Sdn Bhd has been revised upwards to 801.8 million ringgit from 375.5 million ringgit previously, following 3 variation orders. OSK Holdings is acquiring a 3.3-acre parcel in Subang Jaya from Tropicana for 44.3 million ringgit, earmarked for serviced apartments with an estimated GDV of 427 million ringgit. Tax Cycle Technology said all conditions under its share sale agreement to acquire a 60% stake in Safety and Environmental Laboratories Sdn Bhd have been fulfilled, making the transaction unconditional. And finally, Apicot is diversifying into property development via a 72.1 million ringgit joint venture with NCT Alliance to build 876 terraced homes in Batang Kali. Now, that's a wrap for Morning Bell Updates with me, Anujarya from KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.